The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone, and welcome to today's webinar, Digital Insights for Community Institutions, Navigating 2024 and Beyond. Today, we will be exploring some key aspects of digital banking, both where things stand now and where we expect them to go in the coming year. I'm Terry Badger, Director of Thought Leadership at Curinos. As the industry's leading provider of data analytics and technologies, Curinos is here to help your financial institution attract, retain, and grow more profitable customer relationships. Curinos has partnered with Advisors Plus, PSCU's consulting practice, to help community financial institutions optimize their digital offerings via data and insights developed using the Digital Banking Analyzer. It's now my pleasure to introduce the digital banking experts taking part in today's conversation. Brian Day is a solutions consultant at PSCU, where he works with clients to help them better understand digital banking trends and product solutions. Brian's deep experience in innovation and product development positions him as a valuable resource for credit unions seeking to understand industry changes and crafting successful strategies. And Suraya Randawa is head of omnichannel experience at Curinos, where she oversees the firm's team of researchers helping banks, credit unions, and fintechs around the globe evaluate digital journeys and adopt the most successful strategies across mobile and desktop platforms. One final thing before we begin the main part of the presentation. We encourage attendees to pose questions to Brian and Suraya during the presentation. When you're ready to ask your question, please type it into the question box in your GoToWebinar control panel. This webinar is being recorded, and all attendees will receive the recording via a follow-up email. So with all that said, now it's time to get into the substance, starting with a poll question. Can we bring up that question, please? So the poll is, what digital trend from 2023 is your organization particularly interested in learning more about? Is it fintech app updates? Is it financial wellness and personal finance management? Is it digital onboarding, or is it something else? We'll keep the poll up for a little bit to give folks time to register their votes. But when we do bring it back down, Brian and Suraya, I'm going to ask you to weigh in on what folks are saying. 5, 4, 3, 2, 1. Let's take it down and see what our results are. So the results are digital onboarding is a clear winner here. So Suraya, let me ask you, what do you make of these results, and especially the digital onboarding is such a runaway?
Well, it's no surprise to me, Terry, in terms of what we're seeing with digital onboarding. A huge goal, and you know what we've seen in terms of what's being built in the last couple of years with community institutions and credit unions is about enabling that digital onboarding journey, bringing that customer in and making sure they're actually a good, strong, working, and engaged customer. So for me, that is this. Absolutely no surprise. I, of course, will probably have an other in there in terms of something else. I'm sure there's 13% at other, but this to me is as expected.
Yeah.
Okay. Oh, go ahead, Brian.
Yeah, I was going to say I completely agree with Suraya. I mean, when we look at community institutions, and if you rewind the clock a little bit and think about the Apple Card coming to market, that really changed the game as far as how to get new cardholders on board. And so we've certainly seen from a PSCU lens, community institutions focusing on how to make that process easier and how to digitally deliver cards to new cardholders.
Yeah, so we will be talking about fintech apps. We will be talking about financial wellness, PFM. We will be talking about digital onboarding in today's conversation. But first, let's start with a brief recap of the digital banking landscape. So I want to ask each of you, starting with Suraya, as you look back at 2023, what stood out to you as the year's most impactful digital trends?
So I think the number one trend that's probably not stated here, and the biggest noise that's not just within digital banking, but outside and in technology for me, is AI, specifically generative AI. For me, this is a hot topic, right? But we can't really comment a lot about this because from an actual UX implementation, experience implementation, it's clearly still in the works. But I have to acknowledge this, I don't think there's any institution that we've worked with that hasn't asked this question or raised this topic. I call this a CEO question, right? So I think that's for me a big one. The other aspect is the sort of broader trend around revamps and redesigns. So thinking more broadly, this is, we talked about onboarding journeys, but also for servicing journeys. And in a lot of cases, when we think about that broader trend, it's about really thinking about the number of brands which are kind of thinking, can I simplify this journey? Can I redesign this account opening better for mobile? And then for servicing, largely, we see a simplification and also kind of adding more flexible interfaces for what's to come, right? So we a couple of years ago, we saw the national banks doing this. And what we're seeing increasingly are credit unions and community institutions adding these sort of more flexible interfaces at the home screen. So, I think FIs in general are prepping to talk more to their members and customers on digital, and that medium is changing.
Yeah, and to build on that, what Suraya said is I have very similar themes. Digital experience personalization. I think that kind of builds on where Suraya ended. Is how, as an individual user, can I get an interface that looks like I want it to look and allows me to conduct business in the way that I want to conduct business? So I think that digital experience personalization is really important. I know we're going to dive into it, but when we talk about that personalization, I think that also extends into financial wellness and personal financial management, is using that data to be able to build a clear picture for that customer member on where things at, and also more importantly is where they headed is, and what advice can be provided to that individual to help them be more efficient or to help them learn something that they didn't know. So I think those are a couple of things. And then I'm going to echo what Suraya said, is we've seen, particularly at the large institution level, a real focus on the removal of friction. And to be specific about that, building widgets or long press functionality to give that user information before they even log in. And so I think as you look at defining a user journey, maybe if there's 10 steps, if you can move or cut out 2 or 3 of those steps, I think that's a real win for user experience.
So one of the key basics in being able to compete in the digital banking space is having a mobile app that is both engaging and is easy to use. So you all keep a close eye on what's going on in the app arena. Brian, I'd like you to go first on this one. What financial institution app updates caught your eye this year, and what made them stand out from the rest?
Yeah, so there were 3 that caught my attention. So the first is Wells Fargo. So we saw relatively recently Wells Fargo undergo a pretty major redesign of their digital experience. And so this year was certainly a carry forward of that effort. So they launched a couple of features that were pretty noteworthy. So one was LifeSync, so personal financial management, wealth management type of functionality. In addition to that, they also launched their virtual assistant, Fargo, which I think we've seen, based on industry comparisons, a pretty powerful feature that's been added to their digital experience. And then finally, I mentioned that they started really relatively recent time frame updating their digital experience. And that was specific to their native mobile application. You saw that carry forward as well with a revamp or refresh of their iPad app. So you look at those 3 things, I think that's a pretty good year for Wells Fargo. And again, a real carry forward extension of some of the efforts that they've put in place previously. And then a couple others that stood out to me, Revolut, in revamping their digital experience, launching new branding, so new colors in there. And back to some of the things that we talked about just a minute ago, is really seeking to remove some friction from some of the key experiences within that application. And then last but certainly not least is Apple with the savings account. So I mentioned the Apple Card previously and the seamless onboarding. They carried that forward with the savings account capability. So really, those were the 3 that jumped out to me.
So as I think about 2023, it seems to be a year of gradual change on the digital front. advances that were really more modest than they were moonshot. Regarding the updates that you were just talking about, how do you see them as being more incremental in terms of their experience? Suraya, what do you think?
So I think, actually back to what I talked about right in the beginning in terms of that flexibility, what we really saw is more incremental changes around the home screen. So with the number of institutions that we track on the digital banking analyzer, about 100 just for checking, just looking at checking for over 130 institutions, we saw about a quarter of the brands actually made changes in their UI just in the last quarter. And that was, whether they've added some changes to the actual scrolling down the home screen, whether they changed some process or some components that they had. So you're seeing that gradual, that sort of implementation and tinkering of the different components of that. The second part is also thinking about that sort of onboarding journey as well. So we're seeing, again, incremental change where, whereby you perhaps would have entered an account number, your sort of code in there for funding, right? So what has changed is we're seeing that sort of increase for third-party API funding and account connections. I would say a couple of years ago, I probably could have counted on one hand how many institutions would have used third-party API funding to sort of smooth that link, smooth that transition for inter-account connections. Now we've got about 25% of brands, and the two examples that you can see on screen are CU examples where it's Affinity and also Baxter, where they actually state the third-party APIs that they're used to connect the accounts. Right? So I think this is also really interesting for us to be able to see these journeys that kind of starts that connection early on in the relationship, and I expect this to grow. The final part really is that sort of, like I wouldn't say it's incremental, it's probably more innovation here, Terry, and I think it's really around buy now, pay later. So the example you can see in the middle screen here is a little bit of an innovation here. Most provider-led buy now, pay later tends to be that sort of post-purchase installment buy now, pay later. Monzo UK actually introduced the Flex card, which is relatively unique, where you're starting to see FIs now taking, so, not a standalone buy now, pay later provider, but, a bank pulling in the Flex card, and you're able to use that at point of sale, whether it's online or in person. And you can set up those installment purchases. You can set up a purchase as an installment purchase as they conduct the transaction, as opposed to I've already conducted the transaction, I'm getting my statement, and then I'm choosing to make this a buy now, pay later, such as, my Chase plan or, Amex Planet. So if you think about this, it's actually changing the flexibility of buy now, pay later. And I think as I mentioned in the beginning, the biggest trend in general for incremental, it's about truly, if I were to summarize it, truly using the digital medium for interaction as it's designed to be. Whether it's the Monzo Flex card where you can go in the back end and make that change, whether you are tapping into an insight that's being sent to you on a home screen. It's really about, or even as Brian mentioned, tapping on a quick link to take a quick action, right? It's about having that flexibility to give more control, more communication, more interaction. It's really nice to see that development in the past year across the broader institution set.
So Brian, focusing more closely on community institutions for a minute, how would you assess the improvements that they've made with their mobile apps this year, and what does that mean for them competitively?
Yeah, so I was, as mentioned, not surprised by the poll results. And that's one of the themes that we've seen over the last several months is how do we use technology to get cards in the hands of cardholders faster? And so one of the areas over the past several months that has really been a focus area for PSCU and clients is if a cardholder's card has been lost or stolen, is digitally delivering that new card so that there can be in-store purchases and online purchases made. And we're still going to mail that physical plastic, but we're going to give that cardholder the ability to immediately transact on the heels of that lost stolen process. And I think that's really key because that's a critical moment. If you think about without the technology, the experience is, well, that card's out of commission for 3 to 5 business days until I receive the physical card in the mail. And my life's not going to stop while I'm waiting for that card to arrive. So I'm going to pick out another card and I'm going to start using that card. So that's a dangerous moment. So using that technology has been a really big win and a good area of focus for clients. And what we've seen now is a real appetite for that same technology to be applied to new account opening. And so when we see the interest of the folks that are participating in this webinar on digital onboarding, it's not surprising, because that's where we've started to focus now is, okay, we've solved that lost stolen use case. Now let's look at, for new accounts, how do we get those cards into cardholders' hands more quickly? And I think I'd steal a couple of things from the slide here is, buy now, pay later has certainly been a theme. And as Suraya mentioned, we're seeing financial institutions on the large side of things focus on post-purchase. And so community institutions having that same functionality really critical. And then integration is something that we continue to see a lot of interest in from our clients. So when you compare the community institution set to the larger issuers, a lot of community institutions are partnering with different digital providers, core systems, loan origination systems, personal financial management companies, you name it. There's a lot of different partners that need to fit in cohesively. Otherwise, that digital experience is not matching what you're seeing at the large institution set. So integration is becoming really critical. And what we're seeing and hearing is that our clients, again, they're community institutions, are really interested in trying to find the best partner set and bring that into that cohesive experience. They're looking for, particularly on the digital provider side of things, they're looking for entities that are flexible and willing to integrate with new partners.
So I'd like to shift the conversation now to the topic of financial wellness and personal financial management. So I'd like to bring up our next poll question, please. Financial wellness is an area that is getting an increasing level of attention to the point where January of each year is Financial Wellness Month in the US. So our poll question, do you feel like your digital solutions equip consumers with the tools needed to effectively manage their finances? Yes, our digital solutions empower effective financial management to some extent, but there's room for improvement. Or no, our digital solutions could benefit from enhancements. So let's give a little extra time for folks to register their votes here. And okay, how about we take it down? Another overwhelming winner. Splits the difference here. So to some extent, but there's room for improvement. I guess probably not a surprising answer, Brian?
No, I think when you look at where community issuers are, that's exactly what I would expect.
So before we get too deep into this topic, which is a broad one, let's do a level set for listeners. Suraya, how do you define personal financial management in today's context? And how has that definition changed over the years?
So I like to think about it as PFM 1.0 and PFM 2.0. So when we think about 1.0, PFM solutions were kind of hived off in a separate part of the app or the platform where there was a lot of user input, right? So the user had to put in their spend. They maybe had to recategorize a lot of things. They had to set their budgets, perhaps state, and even today, state your desired goals here. You might have had to be a sort of a keen financial hobbyist, right, to go and review that information, do the interpretation, and then make some decisions. There's a lot of user sort of input here. Now, as we move to kind of the second stage, which is now what we're seeing here, there's a kind of recognition that financial management is a sort of more encompassing view, right? It's closer to life management, right? Because you use your finances to manage your life, what happens you do in your life. So I think this is actually then translated in a digital implementation point of view. So it's more encompassing in different parts of the app, different parts of the digital platform. So you've got insights, feedback and communication on the home screen. You've got adaptive messaging and visualizations, right? You might even get some sort of, when you get to your sort of transaction list, some predictive spend, some predictive balances here, right? There's some institutions who do that, which are great. I love that, by the way, when I have a predictive balance. And you have proactive alerts and notifications. And then the other thing, sort of more broadly, which is, as we note on the slide, adding a credit scoring aspect to that, and perhaps sort of broader financial measures to recommend actions to improve, or even sometimes products to improve. So I think we're seeing this sort of evolution to that sort of narrow space to a much broader understanding about how, I would say, how financial institutions can help members and help customers.
So also changing over the years, along with that definition, is the complexity of the financial landscape, as well as challenging economic environment that we're in, with inflation and interest rates climbing to levels that people have not seen in many, many years. Brian, I want to ask you, how much are these factors driving the desire of consumers to know more about their money so that they can better plan for the present and also plan for the future?
Yeah, it's a great question, Terry. And I almost don't know if it's a consumer desire as much as it is a necessity. Because when you look at the landscape, you mentioned a couple of key things. We came out of COVID, and I say the collective we, with a lot of cash on hand from a consumer perspective. And you've seen an extended period of time of inflation. You've seen interest rates ratchet up. Wage growth has not kept pace with those measures. And you're starting to see some of the underlying foundational components of consumer financial health trend downward. So you look at credit card debt. I think probably a lot of us on the line here have seen that in the United States it surpassed $1 trillion, which is a first there. You're just starting to see some downtrend in consumer financial health. And so when I think about the historic experience of logging into a digital online banking or logging into a mobile app, what does it show you? It shows you your accounts and your balances. And Suraya talked about a couple of things that I think are really critical, is having information centralized and having information that's predictive. So my balance today doesn't really tell me anything. Like if you tell me what my balance is today, but in 2 weeks I'm going to have a problem, that's the kind of thing that I need to know. So it needs to be central. It needs to be predictive, and there needs to be a set of action steps that a consumer can take in order to rectify the situation or to make a different set of choices. So I think that those are, I think it's really a necessity for the general consumer to have the tools at their fingertips, and for digital solutions to shift from a presentation of information to still presenting that information, but layering intelligence along with that information presentation.
So Brian, as you think about PFM in action, and particularly, with the insight that we've gained here from the attendees, that most of them are in sort of the to some extent category, what should be included in the experience in order to provide the biggest benefit to consumers?
Yeah, and so I think what we're seeing, the good news, and that response on the poll again didn't surprise. And I think the good news is we're seeing movement in the right direction. And so you start to see more and more institutions put a credit score module in their digital experience, for example, and not only a display of the credit score, but also how do you improve it? Maybe even some modeling to say, if I'm at point A and I want to get to point B, how do I take steps to get from point A to point B? And so you're also seeing some more budgeting and spend insights. And so what I expect to see, and what I think makes the information more valuable, and Suraya hit on this, is I think it needs to be central. So when I come in to, whether it's online banking or I log into the mobile banking app, I need to be able to see where I'm at, and visuals always help. You think about coming into a digital experience, there's a lot of numbers there, so visuals are really critical. And then I also think, and Suraya hit on this, is there was a lot of work in PFM 1.0. And so in today's environment, we have the advantage of better technology and the ability to take and ingest data and be able to take that data and say, okay, we generally know what the consumer's inputs are. We generally know what the consumer's outputs are. So how do we put that information together and say, okay, based on what we know and based on past experience, we've got a situation where everything's fine today, but to use my example previously, is in a couple of weeks, that mortgage payment's going to draw from the checking account, and there's not enough money to cover that. Now we do know that there is money in the savings account, so move that over, and that's a fairly simplistic example, but that's an example of when that information's front and center, and when I see it when I log on, and I know what the situation is, but also know what's coming down the line, is I think that's what you need to see from a movement perspective based on where we're at today to where we need to go.
So Suraya, you spoke a little earlier about the transition from PFM 1.0 to PFM 2.0. So it's clearly an evolving approach to improving customers' financial wellness. So as you think about PFM 3.0 and beyond, what do you see? Where do you see personal financial management going from here?
Well, it's actually picking up from what Brian said, right? What I really see when I like to look at the development of PFM, it's really about a continuum. 1.0 is that sort of continuum of how active the user input needs to be. 1.0 means a lot of user input. 2.0 is slowly adding more predictions, some guidance for the user, right? 3.0 is about automation, right? Which is about taking actions on behalf of the user. So for example, there's a fintech sort of savings and investment app, Plum, based in the UK. It intelligently sweeps the amounts based on your preference for savings. In fact, it looks at, how much money you have before it actually makes a sweep for you. It's quite fun. You have a shy mode, a chill mode. You've got an ambitious mode, or you can go a beast mode for more deposits, right? They also have a money maximizer, which then auto calculates how much you should spend. So it takes your budget and actually has that. So if you think about that, it's actually not just predicting, but saying it's telling you this is what you should be doing. So if I were to take this further, just tapping into what I talked about around AI in the beginning, it's like when AI, and it's when it's ready, when it's regulated, when it's built with sufficient constraints, generative AI, it can start making recommendations, taking actions on behalf of the user, right? And it's based on understanding what the user's preferences are, what their goals are. But then the reason why I say generative AI is that aspect of tying together multiple data sources. So, Brian, you talked about credit scoring, you talked about spending behavior, you're talking about budgetary goals and savings goals, perhaps, right? Taking all those sources of information, then providing that output that's useful for the user and minimizing their level of input. I do see, when I think about community institutions, when I think about credit unions, this is precisely where you are. You're really helping your members and your customers make better decisions. And, sort of thinking about financial wellness on that front, providing that sort of recommendation or advisory capacity, it can be really powerful.
Yeah, and to add to what Suraya said, couldn't agree more, is that when you look at community financial institutions, that's their bread and butter, is they're community-based, and they benefit when the financial health of their customers or members are strong. So they're well positioned to deliver that type of capabilities out to their end consumers. And I just want to add one thing to what Suraya said as well, is when you look at PFM 1.0, she talked about some of the inputs that a consumer would have to do or had to do in PFM 1.0. So I kind of label that as work. And as you start to move down the spectrum of 2.0, 3.0, et cetera, the technology is really going to be aimed to take that work away from the end consumer. But I would also say that if you can demonstrate with a baseline set of data, if you can demonstrate value to that consumer using the base set of data, they would be more likely to put in a little bit of work to get more recommendations and more valuable education. So I do think that as we look at the transition from 1.0 to 2.0, and as Suraya talked about 3.0, et cetera, is there's going to need to be a basic demonstration of value to that end consumer to incent or entice that consumer to take the steps, whether it's linking in an external account or whether it's tagging something or changing something from a budget perspective. But once they see that, oh, if I spend just a little bit of time, I get a lot of value, I do believe that consumers would be willing to take that step. And I think that's where PFM 1.0 fell short, is there was a necessity of work before the demonstration of value. And so now we're in a position where we can demonstrate value and then entice the consumer to put in a little bit of additional work along the way.
Okay, so now I would like to bring the conversation around to digital onboarding, which, if that initial poll is any indication, is probably the prime area of interest for most of today's attendees. So if we could start this out with our next poll question. So the question is, how important is offering digital card issuance to new cardholders at your institution? Is it significantly important and is being offered today? Is it moderately important and you are working toward implementation? Or is it not really important and not currently a focus? So attendees, if you could register your votes, please. We'll keep this up for another few more seconds. Okay, let's look at some results. So again, not a surprise that the middle road was taken one more time, moderately important and working toward implementation, though a very large number, a large plurality here is already offering it. So Brian, what's your take on this?
Yeah, that really mirrors what we saw from a 2023 perspective. Is a lot of PSCU clients selected to move forward with the digital issuance product. And so we're seeing them either offering the product today or, to the middle box there is on the way to offering the product. But I think what's interesting is, it feels to me in the conversations that I've had with PSCU clients is that there's very little pushback on the value proposition of the technology. So the community institutions recognize where the larger market is moving toward and recognize the need to get those cards, whether they're lost, stolen, or new cards, into the hands of cardholders as quickly as possible.
Suraya, start us out, if you could, in this section on digital onboarding by giving us an overview on what the latest Curinos research shows regarding consumers opening new accounts via online and mobile channels. And maybe in your answer, you could touch on the quality of those accounts that are being opened digitally.
Sure, Terry. I think so. I'll give some data from our distribution analyzer, which really looks at deposit accounts, checking accounts specifically. Typically, what we see when we compare branch acquired customers to digitally acquired customers, there's about an 87% gap in terms of the actual balances, the size and the amount of balances at the end of the first month of book. So there's a big quality difference here. And then when we think about retention, there's a 47% difference where you have digital new to bank customers after 18 months, only 24% of them being retained. So I think institutions are faced with kind of a change in paradigm here in terms of, what does it actually mean to digitally onboard a customer? What do we actually need to do here? And, while I expect there's a level of demographics, perhaps, you might have younger sort of applicants, there's psychographics in play, so both demographics, psychographics, income at play here, which is, perhaps why deposit quality is lower, right, for digitally acquired accounts. I also think there needs to be a sort of different approach to sort of engaging sort of new customers, new members, right? It's thinking a way, you can't be thinking the same way that you're sort of approaching a branch acquired customer here, and then just simply transplanting this to the digital.
So Brian, based on, Suraya, I think we've lost your audio.
Yeah, I can jump in there, Terry, because I think what Suraya was building from a foundation perspective is really critically important. And one of the things that I'll add to what Suraya mentioned is in partnering with Curinos, we've got some data from Curinos that shows that about 75% of accounts are opened in branch. And that is when you look at what's actually happening from a market perspective. Now, when you compare that to preference, it's almost flipped. So almost 3/4 of consumers say they want to open accounts digitally. And so that's really interesting to me because you're comparing what's happening in reality. People are opening in branch versus preference, and people want to open digitally. And so I think the question there is why. And so what's fascinating to me is what PSCU did is a market study, and we looked at the community issuer, the general experiences, and it was specific to credit cards, but how that account opening process or what it looked like. And I think one of the big considerations that financial institutions need to look at is the desire, and we see it on the screen here on the left-hand side of the screen, is you've got a mobile phone there, and people want to do everything on their phone. And when you look at the traditional account application process, and again, we focus most on credit cards, is there's a lot of data entry that's required in order to get that new credit card. And some of it, frankly, my fingers would probably fall off before I got all the way through the application. And so that is not conducive to what we're seeing from some of the large issuers. And again, we've talked about the Apple Card a couple of times, and we've got it on the screen here. And so that's one of the things that we did from a product development perspective, is look at how do we streamline that process? How do we make it more mobile conducive? How do we reduce the amount of information that the consumer has to enter, so that they're entering information and then we're able to pull back details and allow that consumer to validate that detail. And I think that becomes a lot better experience. And again, if you're trying to type that out on a mobile phone, I mean, I just frankly think that most consumers are going to get frustrated or fed up, and they're probably going to move on and find another option, and they're really not going to come back to it. So when you look at some of these entities in the marketplace, we've talked about the Apple Card a couple of times. Chime's got a really sophisticated, a really seamless account onboarding process. SoFi is another good example of onboarding. And so we've seen institutions really work to remove that friction from the experience overall. And when we looked out from a marketplace perspective, we weren't seeing that on the community issuer side of things. So that's an investment that PSCU made, is we wanted product development innovation to focus on removing that friction and creating an experience that community issuers could leverage that would put them on competitive footing with your Apple Cards or your large institutions. So that's really where I think that's it's an important area of focus.
Okay, Suraya, do we have you back on audio?
Yes, we do.
Super. So next question's for you. So another area where the digital user experience is increasingly important is in card issuance. Brian was just touching on that a bit, and it seems in recent years that the standard is being set by Apple with its Apple Card. So tell us, if you could, what is driving the tech giant success in the lucrative card space, and what are the other big players doing in response?
So I think the success can be explained threefold. Now, first of all, and we have to get this out of the way, right? It's the integration in a captive audience. So if you've got half the US market using your phone and operating system, you've got the opportunity to directly market to them and link to your digital wallet, right? That is just the basis of one huge part of the success. The second part is exactly what Brian mentioned, simple and quick account opening. It's really interesting as we're seeing the sort of fallout of Goldman's pulling out of retail, right, and moving away from partnership. We're hearing more and more about what happened in terms of how they built the card. And it was the very clear thing that we heard with Apple when they also did Apple Pay, right? It was Apple really insisting on having the simplest, quickest journey possible, right? So based on its UI. And then the third part is the interface. This is the secret, right? Apple Card onboarding, Apple Card management. Well, they're journeys like Apple journeys, right? So from their buttons to their T's and C's to how they present their modals, it's familiar. You don't have to learn to use another app. So I think that's kind of that sort of secret sauce in terms of what we're seeing here. And I think for me, what the sort of, this whole thing in terms of what Brian mentioned, is exactly what Apple's done. That short and simple, short journeys. Credit card journeys are in general shorter than compared to checking journeys. That implementation around mobile is that sort of one screen, one question way of using, right? And I think, what we see on the screen here with Current and Revolut taking a leaf out of what Apple has done, which is immediate digital issuance, right? And wallet provisioning here. Current and Revolut take it a little bit further. Current issues virtual cards. Revolut, you can get multiple virtual cards. If I think about a larger sort of issuer like American Express, they've also deployed a far more simplified, accessible interface when it comes to sort of onboarding, but also in terms of their sort of servicing. So when you review balance and transactions, it's a really simple tile-based interface, simplified like Apple's interface.
So that's what some of the big boys are doing here, what the large issuers are doing. Brian, what about community financial institutions that issue cards? How well are they keeping pace with all of the advances that are underway? And let me build this into the question as well, since it just came in from one of the attendees. Does PSCU offer easy digital wallet onboarding?
So I'll answer that last question first. So yes, so we support all the digital wallets, and I think to get specific about what we're doing or what the use cases that we've seen from a digital card issuance perspective is the ability to use the card in any kind of contactless situation. So that would be specific to in-store transactions. And then we've also seen, based on COVID and some of that carrying forward, is a huge desire on the consumer side of things now to shop online. And so we're able to issue credentials, again, before that consumer has the physical plastic, and so that they can shop online as well. And I think it's important, I didn't mention this previously, but we are going to ship that physical plastic to the consumer. In the Apple journey, you see that the physical plastic is sort of the physical card. I think it's actually a metal card. So that physical card is optional, but we've seen, the consumer desire is to have that physical card in their wallet. I think we're at a point from a payments perspective that makes most consumers feel comfortable. So that's what we're doing on the PSCU side of things. And back to your question, Terry, the first question on how are community institutions keeping pace, is I do think, and I'll reference some of the comments made earlier, is we've seen in 2023 several PSCU clients and a chunk of PSCU clients move forward with really the digital issuance product. And when I say digital issuance, that in-app automates the replacement of a card when its status is lost or stolen. That allows for that card to be push provisioned into a digital wallet, and that allows for that consumer to see the account credentials for online shopping. So it's really those three components. And so I really think that we're closer today than we were at the beginning of the year, or even end of last year. But I do think, and I think this really spoke when we saw the poll results earlier of community institutions being really interested in the digital onboarding side. I think that focus has, okay, we've got the lost stolen piece locked in now. Now we need to look at the new account onboarding, because I don't think that is on par with some of these larger issuers, and particularly some of the issuers that are on the screen here.
So that brings us to our final segment of the webinar, where we're going to project out into 2024 for some final insights from Suraya and Brian. Can we start that out by bringing up our fourth polling question? So the question is, looking ahead to 2024, do you expect your institution to undergo minor or major updates to your digital experience? Are you expecting major updates? Are you anticipating minor updates? Or do you plan no real updates in 2024? So if everybody could please cast their ballots. Okay, can we bring up the results here? Results are minor updates, kind of going to our incremental discussion from earlier, though a fairly large number, more than a third of you, are planning major updates. Suraya, what does that surprise you at all that we're looking at a majority of minor advances here in this space?
Not at all. And I think it's back to what I said around the incremental. So for those institutions that have sort of taken that step to transform and connect to their core, and also transform their interface, and also work with vendors that enable that flexibility, it's not surprising it's about minor updates in terms of doing that. For institutions who haven't done that, right, who have to go and do the switch, this is where there are big changes that'll happen. That's why you've gotten that 40% who are expecting major updates. When I look at the digital banking analyzer across the range of different CUs and community institutions that we track, it's pretty clear that there's still a lot of work to be done, and some platforms compared to others have more work than others. So not a surprise at all.
So, sort of continuing on with this incremental theme, earlier in the conversation, we all agreed that 2023 has been an incremental change year for institutions. As we wrap up this year and look ahead, Brian, what do you expect in 2024? Do you expect a continuation of these modest advances, or are you perhaps looking at something more dramatic?
Yeah, well, first off, back to the poll results. I'm so glad that option C, that no digital updates planned for 2024, was 0. I think if that was a substantial percentage, I might have just disconnected. And no, but all kidding aside, I think when we look at 2024, some of the themes that we've talked about so far today is additional personalization, some centralization of the financial wellness / PFM functionality, I think lends itself to something that probably sits in the middle of a major update versus incremental change. And so, for example, putting personal financial management / financial wellness tools as a central component of a digital experience is a shift. It probably is on the border of a major update. So I think you'll kind of see, I'm not trying to hedge, but I think you'll kind of see something, when I think of major updates, I think of complete app redesigns, new styles, new branding, new menus, things of that nature. I don't think we're probably quite to that point yet, but I do think there's some opportunity for additional personalization and keeping that consumer financial health as a central component to the digital experience. Now, I do want to also say that when we look at some of the larger issuers, things seem to go in cycles. And I think that if one issuer starts and pushes out a major update, then that can often be a catalyst for others following suit to make sure that they're not falling behind from a digital perspective. So if we do see one issuer, one entity roll out major updates, I think that could be a catalyst or push forward some updates from others.
So let's finish up with each of you talking about an important trend from 2023 that you think will escalate or accelerate in the coming year, and what will drive that escalation or that acceleration. Suraya, can you start us out?
So Terry, it's linked to the question you asked me before around digital quality, right? If I need to improve the quality of my customers, the quality of engagement, the number one trend here is personalization. There's no other way to do this. So how do I translate what I would have done in the branch with that sort of person-to-person contact, knowing that person, right? I will need a machine. I will need a level of intelligence to understand that my customers aren't just 15, 16 segments, right? That I have thousands of segments and customers who have different preferences. They will need different messaging on the different occasions and the different life stages that they're at. So that is kind of, for me, personalization at scale, whether you are, the number one bank in the US or whether you are a community institution, right? That needs to be delivered. That's how digital will engage customers.
Yeah, and I couldn't agree more with Suraya, and I'm going to take the same theme, but a little bit different flavor to it, which is that data and the financial wellness component of it. I've talked about it multiple times, and I really feel strongly that consumers, Terry, back to your question, I don't know if they're seeking it. I don't know if they're aware they need it, but they do need it. And they need that data and that personalization that Suraya mentioned to create value for them and to help them do more with less. We're seeing, back to the financial health component of it, we're seeing a continued growth in the number of consumers that are living paycheck to paycheck. Mm-hmm. And so what that indicates to us is that if anything goes wrong for that consumer, they're in a pretty fragile state. And so being able to plan, whether it's small savings, to try to start to build some level of savings for that consumer, like a savings program or education or something along those lines, those are the types of things that create value. Because if you start today, and you save a little bit of money each week or each month, in a year, you'll be in a better position than you are today. But oftentimes I think some people get wrapped around the axle because they just don't know how to start. And so using those tools to create value for consumers is something that I think is a major trend. And I think it's a place where community institutions are well positioned to fit in the landscape and really, frankly, I think differentiate from others and to take that true financial health and financial wellness and community building and execute on that. And then kind of back to what Suraya talked about from a credit quality perspective, is I also think that institutions, and Terry, I know you asked for one, but I have to give two here to break the rules, but we have to get better from a community institution perspective at building digital relationships. And so if somebody's going to open an account online and we look at younger demographics, they probably don't necessarily want to come into branches. So how do you build that digital relationship with that end consumer? And in my mind, it's the two things that Suraya and I just talked about. It's personalization, and it's also using data and making recommendations that provide value for that consumer. That is an actionable way where an institution can use information, use the digital interface, use data to be able to build a digital relationship with a consumer. Because people don't get rid of partners that provide them value. And so if your bank or your credit union is providing you value, they're going to become an indispensable partner.
All right. So let me stop now and thank Brian and thank Suraya for the main part of our discussion here today. As now we move into the Q&A section. For any attendees who haven't yet submitted a question, it's not too late. All you need to do is type your question into the question box in the GoToWebinar control panel. I do want to start with a question of my own, however. Community institutions, they have limited resources even in the best of times. And 2024 is looking like it might be a pretty challenging year. So what advice do both of you have for these institutions on how they can get the most out of their digital budgets to create the seamless customer experiences, that personalization that you've both been talking about? Suraya?
Well, I don't know. I don't think I'm being cheeky here, but I will actually say, work with a vendor whose platforms have that flex built in, right? Or already have that in their roadmap. It's not a plug for PSCU, but it's a plug for, that's what you need to be thinking about when you're thinking, if you're doing an update, if you're thinking about what you can do. Then if you do have that capability, think about your UI, right? Does your platform have enough flex to design the needs for the modern user? Are you updating your design? Just plain and simple, some aesthetics, I have to say, for the sort of the younger generations is really important. Does your app look like something you would see in the last decade, or is it reflective of sort of current mobile interaction, right? Think about the design, think about the placement, think about how your branding is interpreted within your app and your platform. Just a reskin could change that sort of perception of your brand and the modernity of your brand as well.
Yeah, and what I see, Terry, from a landscape perspective and talking to PSCU clients and non-clients is community institutions, no question about it, are challenged on the resource side. I would also say when you dive in, and I think on the large institution side, nobody has unlimited resources or nobody has as many resources as they need. And so I think there's challenges across the board with resourcing. But when you're operating with a smaller budget, in my mind, that's where efficiency becomes critically important. And so understanding how to prioritize and understanding what to attack first, that's going to give you the best bang for your buck or best ROI. That's where it's important. And so, kind of to build on what Suraya said, is having your arms around the digital landscape, in my mind, becomes important, because if you're sitting there and you're staring at a blank whiteboard and you're like, all right, what should we attack in 2024? I'm not sure there's going to be success there. But if you understand what the major trends are, you understand what some of the major issuers are doing, you understand your current position, you can start to compare those things to say, okay, we've got some gaps. Some of them are things we need to address right now. And some things are starting to emerge from a market perspective. So when you prioritize those different gaps, that helps you attack the most critical ones early and help on the ROI side of things. So in my mind, when you're operating with a limited budget, efficiency is super critical.
Yeah, I would wager that limited resources is on everybody's mind, because our next question is also on the limited resources theme. This one regarding digital onboarding specifically, the question is, what is the most impactful thing that small institutions, in quotes, small budgets, can do to improve digital onboarding? Brian?
Boy, I'm just not a rule follower, Terry. I don't know if one thing. I think in my mind, there's more than one thing. So it really breaks down into streamlined application. And so your application, I hear our clients say we have online applications, and then I go look at them and they're 12 pages long. And I'm being a little sarcastic there, but it can't be a super long application because that's not conducive to all channels. So it's got to be streamlined. I also think when you look at where we're at from a today environment is people need things instantly. So instant decisioning becomes critical. And then also sticking on the instant theme is instantly delivering cards. Like those are the three components in my mind. And I think if you take any one of those out of the mix, I don't think you have a good or comprehensive process. I mean, if I can deliver the card to you instantly, but my application's 12 pages, does it matter? And if my application's, two fields, but I can't get you the card instantly, does that matter? So I really think it's a full experience, and it focuses on those three elements: is streamlined application, instant decisioning, and instant delivery of the card.
So our final question is, Suraya, for you, what are the best use cases for community institutions for AI like ChatGPT?
I think for me, actually, to sort of ride on what Brian said, even on digital onboarding, it's really what we see around help and support for customers. So what are the help and support resources that you can actually deliver to users, whether it's the onboarding journey or whether it's the servicing journey? And that's where I think there's a real power of using conversational banking, conversational AI, and generative AI like ChatGPT. So we have seen sort of some experiments in here where Expedia has added a ChatGPT bot, right, which is a lot more flexible. Where we know some banks in Europe, like NatWest and Commerce Bank, are already starting their experiments in this space. And the space is really about how do we get a bot that's less, like straitjacketed, right? So it's actually a far more broader sort of digital assistant that can have conversations, that can deploy multiple data sources. And when I think about the number of institutions that have deployed, bots in the last couple of years, this includes, it's not just the larger institutions, it's institutions across the piece. So there needs to be some level of improvement in terms of what your bot can do. How can your bot respond? How can it understand multiple user intents? How can it take, back to what I talked about around activation, can it take actions on behalf of the customer? When we look at even right now with the leading chatbots, about 16 leading chatbots in the US, we can see that only about 3 of them can actually do a sort of P2P payment here. Right, so there's not that many activation features that are available yet. So I think there's a lot of power about thinking what can generative AI do for credit unions to have a sort of a better digital conversation.
So that does wrap up our questions. Suraya and Brian, thank you for the insightful presentation on these important themes for financial institutions. As a reminder to attendees, each of you will receive the recording of the webinar in a follow-up email. We encourage you to share that with your colleagues or with any peers who might benefit from the insights and perspectives that Suraya and Brian shared with us all today. That follow-up email will also include a link to the annual digital boardroom report for 2023. But anyone who wants access to that report even sooner, all you need to do is scan the QR code that's now up on your screen. That does conclude today's webinar. On behalf of both PSCU, Advisors Plus, and Curinos, I want to thank you again for joining us and enjoy the rest of your day.